You are listening to The Vocal Technologist. Spoken tech for your ears.
You know, the financial world feels like it's just spinning faster and faster, doesn't it? There's always some new policy, some tech breakthrough, big power shifts happening. It's honestly a lot to keep track of. How do we actually make sense of it all? Cut through the noise. Well, that's what we're going to try and do today. We're digging into some key recent financial news and trends, trying to pull out the important bits for you. Everything from, new bank fees to how AI is really shaking things up. The aim here is to give you a clearer picture of what's going on and really why it might matter to you. Okay, so first up, this is a big one. JPMorgan. They're planning to start charging fintech companies, think firms like Venmo, Robinhood, maybe Coinbase, for accessing customer bank data. We're talking potentially hundreds of millions in fees. It makes you wonder, right? Is this just about fees or is it something bigger, like a power play?
Yeah, it's definitely stirring things up. What's really fascinating, I think, is how it bumps up against this whole idea of open banking. Critics are already saying, look, this is JP Morgan trying to stifle competition because open banking relies on that data access for things like instant payments, better loan underwriting based on cash flow, tools to help avoid overdrafts.
Right, stuff that fintechs have built businesses on.
Exactly. And the pricing they're talking about. It could be like 1,000% more than the fintech might even earn from a single transaction using that data.
Wow, 1,000%.
Yeah. So it feels like traditional banks may be pushing back, trying to regain control over that customer data flow. It could force fintechs to, well, completely change how they operate. And for you, the consumer, it could mean higher prices for those app services, maybe fewer features, or worst case, a return to less secure things like screen scraping. Remember that.
Oh yeah, definitely don't want to go back there. Okay, so while the big banks are making moves like that, the whole landscape is also being reshaped by, these nimble neobanks and just sheer tech innovation. We're seeing some pretty dynamic shifts, like Revolut, for instance. They're apparently looking to raise $1 billion.
$1 billion, yeah.
At a valuation of $65 billion. That puts them in the same league as giants like Stripe. It's huge growth.
It's massive.
And then you've got Ant Group, Jack Ma's company. They're teaming up with Circle.
Right, Circle and their USDC stablecoin.
Exactly. They're integrating USDC into Ant's global blockchain platform. This seems like a big play for international growth. Plus, they're going after stablecoin licenses in places like Singapore, Hong Kong, Luxembourg, major hubs.
It's definitely a global strategy.
Right.
But connecting all these moves, I think, is the incredible speed of AI adoption in finance. It's really changing how things are built and delivered. Take RAM, for example. They've just rolled out these new AI agents specifically for financial controllers. They automate policy checks, fraud detection, and they're boasting like 99% accuracy. Imagine the savings for a big company.
99%. That's impressive.
It really is. And it's not just the newer players. Goldman Sachs is piloting an AI coder cognition's Devon to work alongside their, 12,000 human developers?
12,000, yeah.
They're hoping for maybe a 3x, 4x productivity boost. It signals this massive shift, towards a future where it's about human AI teams collaborating. Less routine work, maybe more strategic thinking.
So AI is changing the back office. Let's shift gears a bit to something very front and center for consumers. Buy now, pay later, BNPL. Super convenient, obviously. But the Federal Reserve just put out a study with a pretty serious warning.
What's that?
They found BNPL use might actually be straining people's ability to pay for housing. Some users are apparently prioritizing their BNPL payments over rent or even their mortgage.
Oof, that's concerning. It definitely raises questions about financial stability, doesn't it?
It does.
But then, on the flip side, you see innovation trying to make things potentially safer or more flexible. Klarna, for instance, is using Visa's new flexible credential tech.
Okay, what does that mean exactly?
Well, think of a single debit card that can be multiple things at once. You could use it as a standard debit card, or switch it to act like a credit card, or use it for a BNPL purchase, maybe paying for. You can even link rewards. Visa's CFO basically said you can just toggle between funding sources right there in the moment. Real-time control.
Toggle. So more control, more options.
Exactly. More convenience, but maybe also more complexity to manage, right?
Right. So pulling it all together then, we've got these traditional banks battling it out with fintechs over data, AI becoming like a fundamental part of the team.
A core member.
And then consumer payments getting incredibly flexible, but with these new potential pitfalls to watch out for.
It really leaves you thinking, doesn't it? With all this change, all this innovation and these power shifts, How might your own financial habits, or even the services you can access, change in the next few years? What could it all mean for, your own planning or even the economy as a whole?
Definitely some big questions to ponder. It's worth keeping an eye on how all this unfolds. Thanks for joining us for this exploration today.
Spoken Tech for your ears.